pull up page 1.4 and 1.5. So go back and take them out of your journal, or out of your book. Don't tear them out because you're going to want to put them back. Open up the binders and take them out. And then close the binders again and turn page 1.4 and 1.5. And turn to the purchase journal, which we worked on first off today. Okay? Now, pages 1.4 and 1.5, do you recognize what those are? Those are the T accounts. Each T account represents a separate account. Instead of having the full general ledger, which would have a page for each account, like we had here, by using the T accounts, we can have the whole general ledger on 2 pages. Okay? And so what we're going to do now is do the 4th step, and that is to post to the general ledger. Now this is part of the compilation step, okay? But we want to do that for each of the journals, is we're going to post each journal to the general ledger. So this is what I want you to do. Let's do the first journal together, and then after that you can do it as you have time. Let's go in the purchase journal on pages 8 and 9. We have credits on the left-hand side and debits on the right, correct? So first account with the total was flooring payable. Are we going to debit or credit flooring payable account? We're going to credit it, right? Because it's on the left-hand side, so we're going to credit. Which category in the general ledger is flooring payable? It's a liability. So in the liability section of the general ledger, find flooring payable, and on the credit side, enter the total of that column, which is $2,432. So write $2,432 on that left-hand side. Or excuse me, on the credit side of the general ledger, flooring payable account. So it's going to look like this when you're done. Here's flooring payable and liabilities, $2,432. And just write PJ for the purchase journal someplace there to cross-reference so that you know where that total came from. Do you see that? So now we go to accounts payable. That's the next column over. And we're going to credit accounts payable for how much? How much is it? $13,840. So is it going to be a debit or credit to accounts payable? Credit. So over in the credit side, we're going to credit $13,840 and put a little PJ there so that it identifies where that came from. Okay? So now we've got 2 credits, and the 2 credits total how much? $16,272, right? Now we've got to make a bunch of debits. Okay, so we go to the other side of the journal, and the first one is contract labor expense. Now, where do the expenses show up in our general ledger? Under expenses. So we go in there alphabetically sorted, so we find contract labor expense, and we're going to debit contract labor expense for how much? $470. So we're just going to put $470 on the debit side, that's the left-hand side of the T account, and put the PJ over there so that we can identify where it is. What's our next account? Furniture inventory. That's debit for how much? $5,840. Where's furniture inventory at? Which section of the general ledger? It's a current asset account, right? So we're going to go to the current assets and find furniture inventory. There it is. Up in the upper right-hand corner of the current assets, and put $5,840, and that's a purchase purchase journal entry. So put a PJ after it. It's a debit. We're increasing furniture inventory. Carpet inventory, we're going to increase that $7,000. So put a $7,000 in there and a PJ on the debit side. We're going to debit appliance inventory $1,100. PJ in a circle, or PJ so to identify it. And we're going to debit television inventory for $1,332. And we're going to debit building maintenance expense. That's going to be in the expense category. On the other page, find building maintenance expense, and we're going to debit it for $130. And the last item is legal and accounting expense. We're going to debit that for $400. Everybody with me? Now, if we have posted this correctly, if we've posted the credits and the debits correctly, does this balance? Yeah, because we made sure our journal's first balanced, right? And so if we post it accurately, the general ledger will balance, correct? The debits and the credits will be equal. Now, that's one thing a journal does for us, is it makes sure we're balanced. If we're at the end of this process, we're out of balance, where did the problem occur? In the posting to the general ledger, because we were sure we were in balance up until that point. So we don't have to ever go back to the transactional level. We have to just go back to the posting level where we post it from the journal to the general ledger, because we know the journal was right, or at least it was in balance that time. Okay, that's one of the values that journals give us. Could we have 1,000 transactions listed in the journal? But before we post them, we know that those 1,000 transactions are balanced. Okay, so I think you can see why journals, first of all, they give us more documentation, more information, don't they? They also simplify the process. We didn't have to worry about debits and credits necessarily when we were entering transactions in. We just had to put the stuff in the right, take the right number and put it in the right place, right? And the third thing is it ensures that we balance before we move it into the general ledger. So journals have their purpose.
Post the totals from each of the 4 journals completed so far into the general ledger T accounts on pages 1.4 and 1.5. Note that the answer in the appendix contains entries from journals that we have yet to post, so don't be concerned if there are more entries than you presently have.